Hey traders, did you face the same situation? Whenever you buy gold, it goes down, or whenever you sell gold, it quickly goes back up. Isn't it frustrating? Now, there are multiple reasons behind this. One could be fundamental factor. Now, in the recent past, the economic data released from the US was a mixed bag. So, some of the reports it showed that dollar will remain elevated. Federal Reserve members they have not shown keen interest to drop the rates, so which means dollar is getting stronger again. But at the same time, central banks are buying gold in huge quantity, which supports gold prices. So professional traders they understand this pattern technically. After a strong rally, market enters into a compression phase, and this is the time where most of the retail traders they lose money. Now, in today's video, I'm going to decode the charts and I'm going to explain the technical setups for dollar index, Euro USD, Pound Japanese yen, NASDAQ, and gold. So let's begin with dollar index. And right now I'm beginning from the daily time frame. I'm going to zoom out and I'm going to use a very simple method here. So I will apply a reverse fib on the last leg up. So when we plot the reverse fib, it gives you the extension levels in the opposite direction. And dollar index, it dropped precisely to 138.2% and bounced back. So currently, the strongest upcoming resistance zone falls in between 78.6 to 85.4% of the previous move up. So this is going to be your major resistance area. And our local resistance means the nearest resistance falls at the current level. So this is our current level of resistance. That is the 100% level of the previous leg. Now I will zoom out and I'm going to apply fib extensions in the bullish direction. So this is the reversal point and I'm going to apply my first extension here, point A, B, and C to be applied. I will connect the bullish extension. Let's use it. So first fib extension in the bullish direction applied. And I need to mark a vertical line here. That's it. So here, right now, dollar index is trading marginally higher than the extension of 100%. Now, if it continues, then the next target would be 101. So first resistance falls at 100.339 or 34. And if dollar index continues, then it will rise to 101. And further, it will rise to 101.70 to 102.33, which is 78.6 to 85.4 fib retracement of the previous leg up. Now I'm switching to 4-hourly frame. Now on the 4-hourly frame, if you notice, starting from the vertical line, we can see here that in the previous week, I've explained the divergence between this high and the next high. So there was bearish divergence, which shows weakness in the buyers, but the sellers could not complete the breakout structure. So we used a trend line method for validation. I'm going to use that again. So I will pick the trend line from the bottom and I will pass it from the break of structure level. And even the trend line was you can say it was broken, and then again the buyers they quickly took the price higher than the trend line. But currently dollar index has reached back to the previous high, so it may form a double top here, and the double top may bring some temporary correction. And if we see a fall below the rising trend line, a retest of 61.8, that is 100.04, then we can see deeper correction in dollar index from the current level. And MACD histogram has turned bearish again. So this shows temporary weakness in the dollar index. Now I'm switching to 1-hourly chart. And on the 1-hourly chart, I'll be using the current leg only. So I will pick my trend line from this double bottom area. And based on double top, I'll be marking a new rising trend line here. So this is the new rising trend line, so 1-hourly trend line. So in case if we see a fall below the 1-hourly trend line, then there could be some temporary pullback. and dollar index may find support at the previous trend line and quickly bounce up. So again, it's a mixed bag based on technical pattern as well. So right now it is more inclined towards the rise, and the next level is around 101, but it is at a local resistance area. Now I'm switching to 15 minutes, reset the view, and based on 15 minutes I can see an impulsive move by the buyers, a temporary drop, and the next leg up takes dollar index back to the same level, and the sellers, they have taken the dollar index slightly lower than the breakup structure level of 15 minutes. So there could be a probability where we see a temporary pause, and this pause can be measured with the help of Fib retracement on the current 15 minutes leg down. So I'll be starting from the highest and marking to the recent low. Now the level of resistance falls in between 100.33 to 100.31, which is Fib retracement of 78.6 to 85.4, and the current level of support falls in between 23.6 to 14.6. So this is the local support here. So maybe in the coming week we see a rise towards 100.33, and in case 100.33 acts as a strong resistance, then we can expect a sharper drop here, but again a temporary drop towards the 4-hourly rising trend line and then continuation higher. So most likely, let me move back to daily chart. So most likely dollar index is expected to complete its corrective pattern around 78.6 to 85.4 of the previous leg, and this is a very, very strong area of supply, and I'm expecting dollar will rise gradually towards this area, and then we will see a sharper reversal and resumption of the downward trend for dollar index. So in the short run, it is more inclined towards reaching towards 101.70 to 102.33. Now let's move down to Euro US dollar. Now again, based on the daily chart, I'll be using the same technique, the similar technique. So here I'll be using reverse Fib in the downward direction on Euro US dollar, and taken the reverse Fib into account, I can see that Euro USD has risen towards extension 161.8, completed the bearish divergence and started rolling down. Now I'm gonna mark Fib extension on the downward movement. I'll pick the highest point on the chart. So this is the highest point of Euro USD, and sellers entered into the market from this level. I'm gonna pick the first leg downward. So here, this is the point A, this is our point B, and this can be taken as point C here, or we can take the entire leg as one wave down, and this can be taken as point C here, because this histogram is stronger in terms of pullback. So let's measure the impact. So here I can see Fib extension. We have two options. So this is the first one, point A, B, and C applied, and we can see that Fib extension 61 provides the local support here at 1.1497, and we can see bullish divergence coming into play between these two low points, so which means the sellers are now exhausted, but temporary exhaustion, because MACD lines are still creating a pattern of lower low. So there could be a temporary rise here, or maybe a compression, sideways consolidation, and then continuation lower. So we need to identify, after identifying the bullish divergence, we need to pick the breakout structure level. And the breakout structure for buyers is at 1.1688, which is far from the current price. So in this case, we will apply a trend line method. I will connect the highest point. And on the basis of the trend line method, we can say that buyers have entered into the market here. And now there is a probability of retest and then continuation higher, because dollar index is sitting at the level of resistance. So we are expecting a bullish behavior in Euro US dollar. I'm moving to 4-hourly frame now. Now on the 4-hourly frame, I'll take into account Fib retracement on the current leg up applied, And now EURUSD has fallen back to the strongest level of support, which falls in between 78.6 to 85.4. So 1.1500 is the local support for Euro US dollar. And I can see that sellers are exhausted. I can see signs of exhaustion on MACD histogram. We can expect some short-term bounce here. And best case scenario, we can expect Euro USD to bounce back towards 14.6 to 23.6. So this is going to act as the nearest level of resistance now. So let's highlight. So this is gonna be a resistance area. Let's highlight with red. So in the upcoming week, I'm expecting Euro USD to take support at the current level of 1.1500 and rise towards 1.1610, best case scenario towards 1.1626. And if we see failure here, then we can expect continuation lower. Switching to 1 hourly frame now. Now on the 1 hourly frame, I can clearly see signs of exhaustion. We can see bullish divergence is building up. Now this would be a break of structure for the buyers. So let's apply a break of structure line here. So 1 hourly chart, buyers, they need to clear the resistance at 1.1540 or 41. Alternatively, if you want an early confirmation, you can apply a trend line here. If you see a convincing break above the trend line, a perfect retest, then you can quickly enter into a short-term buying opportunity and you can take your profit around 1.1620 and exit. So only short-term play. Otherwise, in the longer run, I'm expecting Euro USD to correct further down. Now we can apply the bigger fib extension. I'm removing the previous one. So here, taking into account the bigger leg, so I'll start from the highest, from the vertical line. I'll connect to the low point here and point C. So in this case, fib extension 61 shows that Euro USD is expected to drop towards 1.1392, but not immediately, only after the corrective bounce. The next instrument is GBPJPY. Now GBPJPY right now is in a long-term bullish pattern. So based on the monthly frame, I'm going to apply fib retracement on the previous leg down. So starting from the high of 2007 and the price level of 247.71, I'm going to apply fib retracement downwards. Now based on fib retracement levels on the monthly frame, our long-term resistance is in between 78 to 85. In terms of price level, it is between 220 to 228. And the long-term support is in between 137 to 149 in terms of price level. Let's change the support to green here. And I'm going to apply fib extension in the bullish direction. So picking the lowest point and applying A, B, and C extension here. So first extension applied, and I'm going to mark a vertical line here at point C. And now I will zoom in and apply my next bullish extension starting from the vertical line. So second bullish extension applied here and moving the vertical line to the second C point. And we need to highlight the area of duplication as magnet zones. So this is our strong magnet zone, support zone here. Then we have a very strong support zone at 183.26. And I can see the current level is also a very strong magnet level, but I can see the price action is in favor of buyers. And now we can move down to weekly chart. Now on the weekly frame here, I'm going to apply my next bullish extension in the bullish direction, started from the vertical line. So I'll pick the point A at the vertical line, and we can directly connect with point B and point C. I'm skipping the smaller waves in between. So I'm just picking the largest wave on the weekly chart. So starting from the vertical line, point A, B, and C identified and applied. Let's change the fib extension to green here and move the vertical line here. That's it. And I can use fib retracement on the weekly chart only on the last leg down. So here on the last leg down, I'm applying Fibonacci retracement in the bearish direction. And if you notice, currently GBPJPY is trading higher than the area of resistance. So the area which falls in between 78.6 and 85.4 is now crossed, and it is going to act as our local support. So 201.53 to 202.97 is the weekly support zone for GBPJPY, and momentum is rising in the bullish direction on the weekly chart. So monthly remains bullish to me and weekly is bullish to me. I'm switching to daily chart now. Now this is the area of support, the local area, and I can see that it has created a new high, but right now it is facing resistance at 206.07. Now this is the first move up. I can use this as my Fib extension, second move up as second Fib extension. So this will help us to identify the nearest magnet levels. I'll switch my chart to line chart again, and I'm going to zoom out. And I'll be using from the area of 61. I'll apply my new extension in the bullish direction here. Applied, and I will quickly mark the vertical line on point C here, and I will look for the magnet zones. So currently we are at magnet resistance. So this is our nearest resistance zone, which falls in between 206.07 to 206.84. Once we see a clearance of this resistance, we can expect GBPJPY to rise towards 211. Right now, I can see some signs of exhaustion, but the divergence is not yet done. I'll be switching to 4-hourly chart now. On the 4-hourly chart, the pattern is extremely bullish. Starting from the vertical line, I can see a new high is created here. I can see that we can see some signs of exhaustion here on MACD histogram, but MACD lines have not given bearish confirmation here, which means a short-term pullback from the current area of resistance, hitting the area of support and then continuation higher. So how do we pick the area of support? I'm going to apply Fib retracement on the last leg up. So I'll be using from the lowest to the current highest. So at present, GBPJPY is sitting at Fib retracement 23.6, and the strongest zone of support falls here in between 78.6 to 85.4. So we have highlighted the strongest area of resistance, and we have some intermediate levels of magnet support. First one falls at 38.2%. So we can expect buyers to take over around 203.71 or from the next level of support, which is around 202.88. In short, every drop in GBPJPY is an opportunity to buy. So I'll be accumulating my buy positions on the drop. And if it breaks below 85.4 support, so a sharp drop and a closure below 85.4 in terms of price level below 200.38 will invalidate my bullish view. Otherwise, it remains ultra bullish to me, and the expected target is 211 in the days to come. Now switching to 1-hourly frame. On the 1-hourly frame, I can see that it is creating a sequence of higher highs. So we got the break of this level, and it is continuously creating higher low pattern here, higher lows, and in conjunction with higher highs. Now between the last two highs, I can see higher high sequence on MACD lines. I can see flat histogram, so which brings short-term pullback here, but a drop towards 38.2 is expected to bring first round of buyers. Maybe a deeper correction towards 50% will bring the second round of buyers, and they will take over the control from the sellers. Now let's move to the next instrument, that is NASDAQ. Now starting on the monthly frame, I can see that NASDAQ is continuously creating a sequence of higher highs here and higher lows here. So how do we check the extension levels? We need to apply Fib retracement on the previous leg down in the reverse order. So when I apply retracement in the reverse order, you can see that it has crossed very strongly, and it has bounced very strongly from the extension of 161. So in short, the extension of 161 level is now acting as a strong support for NASDAQ on the monthly frame. And I'm going to apply a vertical line here. So this is the last leg up, and I'll be switching to weekly here. Now on the weekly frame, I get an opportunity to apply next reverse fib retracement on the previous leg down. So similar thing applied on the weekly frame here. Now, if you notice, buyers, they have crossed convincingly the zone of resistance at 161.8. So 25,215 is a very strong resistance area. And the next area of fib support is at 138.2. So 240.87 is the local support now. So currently, NASDAQ is stuck in between resistance and support on the fib levels. So this is my current view, and I can see short-term weakness building here. So I can see drop in MACD histogram, so which shows that short-term correction is highly probable, and then continuation higher. So if it drops below 24,000, then the next major level of support is at 100% level, which is at 22,262. But the ultimate support falls in between 21,240 to 21,565. So I'm going to highlight this area with blue color, and I'll be switching to daily frame now. Now on the daily frame, I can see bearish divergence formed between the higher highs. So here we have wide area under bearish divergence, both on MACD lines and MACD histogram. But since it is a very wide area of formation, the breakout structure is way too deep. So I do not think that the breakout structure would be done so easily. And currently, NASDAQ is finding support at 138.2. So after a crash last week, it found support at 240.87, and it has crossed this area of support, which falls at 24,378. Now moving to 4-hourly frame, I'll be using fib extension in the bearish direction. So I'll be starting from the top here, point A, point B, and point C identified in the bearish direction. Let's apply fib extension here. So first fib extension in the bearish direction applied on 4-hourly frame. And I'll be using the vertical line on point C here. That's it. So it is creating a sequence of high, lower high, and a lower high. It is creating a sequence of low, lower low, and a lower low. But I can see that the sellers are exhausted, and it found support at the fib retracement 138.2 area. So the best way is to apply Fibonacci retracement on the last leg down. So the last leg down is here. So starting from 252.81 to the current low, and I can see that there is a very high chance, very high probability that in the coming week, if dollar starts correcting downwards, then NASDAQ will quickly bounce towards 25,000 mark. So the local support falls at 24,000. To be more precise, it falls in between 24,245 to 350. So this is the local support here. And the area of resistance falls in between 25,000 to 25,104. So in short, in the coming week, if you want to take short-term trades, you can buy and hold for the target of 25,000. And if it shows rejection, and if it fails to cross and close above 25,104, then we can expect it to bounce back lower towards 24,354 to 25,245. And if you see a closure below 24,245 on a 4-hourly candle basis or a daily candle basis with a perfect retest of 24245 as resistance, then we will expect a deeper pullback, otherwise not. Now, finally, I'm moving to gold. Now, I'll be switching to daily chart here. Now, on the daily chart, I wanted to explain the price pattern here. So after this parabolic rise, so usually after a very strong bull run, market either enters into a sharp and deeper correction, probability number one, or market enters into a sideways consolidation, a range bound behavior but sideways, probability number two, or market enters into a triangular consolidation. Now, most likely, whenever we see a triangular consolidation after a parabolic move up, so this is the compression phase, and after a successful breakout and after completing the valid retest post breakout, we see a sharp movement in the same direction. So basically, the trend creates a parabolic move, enters into area of compression. We can also call it as a zone of accumulation, a breakout, retest, and then it flies off quickly in the bullish direction. So this is also known as a bullish pennant formation. Now, exactly similar pattern is being formed on gold right now. So first thing, I'll be using Fibonacci retracement to check the percentage of correction here. So I'll be using this low as point A, this is point B and point C, and from point C I will apply Fib retracement to the top. So let's apply Fibonacci retracement. We'll start from point C and connect to the highest point. And gold has corrected exactly 38%. Now this is our strong level of support, 3944. And the strong level of resistance falls at 14.6, that is 4202. So let's change it to red. At the same time, I can see here that gold is creating a sequence of higher lows and a sequence of lower highs from the top. It will be more clearer or prominent on 4-hourly chart. So let's move to 4-hourly frame here. Now on the 4-hourly frame, if you notice, we can connect the top. So it is creating a sequence of lower highs. So a triangular formation. And from the lower end, it is creating a sequence of higher lows. So now we will apply Fib retracement in the reverse direction from the highest to the recent lowest point. And I got the zone of resistance between 85.4 to 78.6 area of resistance, and the area of support falls in between 14.6 to 23.6 here. So this gives the support and resistance area. Now, unless gold remains above 4011 and more precisely above 3970, we will expect a bounce, and once it breaks the triangle, the falling trend line with a valid retest, so we need to see a sharp breakout. So the first target would be around 4170 to 4190, retest of 4135 or maybe 4100 mark, a valid retest, and then it will quickly march towards 4269 to 4300 mark. Once it breaks above 4300 and creates support above this area, then we will expect continuation higher. So now I'm going to apply Fib extension here. So I'll be using Fib extension from the lowest. I'll be connecting to the first high. So first A, B, and C applied. I'll mark a vertical line here. And now I'll be using my second Fib extension on the next leg up inside the triangular consolidation. Done. And if you see, we have a very strong area of resistance at 50%. So this is the confluence of Fib levels. So the nearest resistance falls at 4135. So once we see a break above 4135, the next target would be 4187 to 4190. So I'm expecting this area to provide support, and the first target would be 4135. if we see a break higher and the break above the triangular pattern here, the next target would be 4190 or 4180. A successful retest of 4135 will push it further to 4270. So I'm expecting a short-term correction in dollar index. So basically, if gold remains under compression, this should be short-lived because fundamentally central banks are buying gold and the long-term chart, monthly and weekly chart is bullish. So I'm expecting continuation in the bullish direction here. Okay, in case if we see a valid break below this zone 3970 with a perfect retest of 3970 to 4011 as resistance, then our bullish view would be invalidated. So in short, I'm not keen to short gold. I'm looking for buying opportunity only. And my first target is 4135 unless it remains above 4011 or a deeper level at 3970. My second target is 4180 to 4190. And my third target is 4259 to 4269. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.